Cathie Wood, or RK Invest, has predicted that Tesla's stock could reach $5,800 per share before the split by 2026. Currently, the price is around $1,933 per share post-split. If we consider the bear case, it forecasts a price of $2,900 per share pre-split, which would translate to roughly $967 per share after the split, with an expected value of $4,600 per share by 2026 after a 3-for-1 equity split, bringing the price to $1,533 per share. These are enormous figures. If you want to understand more, stay tuned. I'll walk you through RK's Tesla projections for 2026, as the chart they presented is quite complex. So please show your support by liking this video and subscribing to our channel. Let's begin by examining the bear case. The bear case suggests that Tesla will sell 10 million vehicles at an average price of $38,000 each, generating $380 billion in revenue from cars alone. The actual figure might be a little different, but it's clear that 10 million is a rounded estimate. What is remarkable here is the revenue from adjacent services, such as human-driven ride-hailing, which is projected to generate $67 billion in net revenue. Autonomous ride-hailing or robo-taxis could be worth $51 billion, which sounds unbelievable, but the numbers are based on ARK's forecasts. Even more impressive is the projected gross margin of 46% for electric cars, a significant increase from the Q3 2018 results, where the gross margin was about 50%. By 2026, RK predicts that Tesla's total EBITDA margin will reach an impressive 37%, up from just over 23% in Q3 2023. The enterprise value to EBITDA multiple is also projected to be 14.5, which is quite high. However, there are questions about how ARK calculated the enterprise value for 2026, given that the typical method involves calculating the enterprise value in the present. They claim to have the figures for Tesla's debt and cash by 2026, so it's clear that their projections extend beyond the usual time frame. Do I agree with RK's forecast of 9.8 million vehicles delivered by 2026? That's a stretch. Some other analysts predict over 7 million vehicles, but we'll have to wait and see how things unfold. Cathie Wood's forecast suggests a gross margin of 50%, which would result in nearly $250 billion in income, justifying the stock price of $967, which equates to $2,900 pre-split. This is based on the total gross profit after costs. However, ARK didn't specify the operating margin or expenses in their projections, instead using enterprise value based on EBITDA. Enterprise value calculations require knowledge of cash and debt, which will be clarified by 2026. Assuming Tesla can achieve 50% gross margins, a 30% operating margin would seem reasonable, though I think achieving this with only 10 million vehicles or relying on robo-taxi and ride-hailing revenues is unrealistic by 2026. To reach these projections, Tesla would need to expand rapidly. If Tesla delivers 9.8 million vehicles by 2026, that represents a phenomenal 54% growth year over year. For this to happen, however, they would need to increase vehicle production by 60 to 65% between 2023 and 2026, which would require new strategies and the introduction of new models at half the cost of the Model 3 and Model Y, as outlined in the Q3 earnings report. The timeline seems tight, and producing those vehicles by 2024 or 2025 could be a major challenge. But if Tesla can manage that pace, the goal of 9.8 million vehicles is possible. RK predicts that by 2026, they will sell 20,000 to 25,000 new vehicles per year, a target that may sound overly ambitious given current production capabilities. One of the biggest hurdles is the mass production of robo-taxis. RK claims these will be manufactured in 2024, but I'm skeptical. The projected $51 billion in revenue from robo-taxis is ambitious, though not completely out of the realm of possibility if everything falls into place. Regarding ride-hailing, ARC expects human-driven vehicles to contribute $67 billion in revenue by 2026. But ride-hailing revenue will only make sense if robo-taxis become mainstream. After all, why would anyone opt for a human-driven car when autonomous options are available? ARC's $3.3 trillion valuation for Tesla seems incredibly high. What's surprising is that ARK did not include Tesla's insurance or energy sectors, both of which could have significantly enhanced the case and made the predictions seem more grounded. The 2030 target of 20 million vehicles will likely be delayed by a few years, and ARK is projecting that 70 million vehicles could be delivered by 2026. The robo-taxi sales, which are expected to reach $500 billion by 2024, are part of this ambitious forecast. It's hard to imagine Tesla generating $500 billion in robo-taxi sales within just 2 years, though it could happen later, possibly in 2030 or beyond. ARK's estimate is based on an average selling price of $30,000 per vehicle, which would push total revenue close to $1 trillion, with a net income of approximately $600 billion. This would mean Tesla's income surpasses $500 billion, but I don't believe this is realistic by 2026. It seems more likely that these projections would materialize a few years later. In 2022, Tesla is expected to deliver around 1.37 million vehicles. To reach 17 million vehicles by 2026, the company would need to grow at a rate of 88% per year. This is an extraordinary level of growth that is difficult to sustain. While in 2022 Tesla may grow by 60 to 65%, sustaining this growth rate year after year seems unlikely. Even with the robo-taxi forecast, where Uber has managed $17 billion annually with 3.5 million cars on the road, Tesla would need to double that number by 2024, and the costs would likely fall as the number of vehicles on the road increases. Despite ARK's optimistic predictions, Tesla's average selling price could fall more sharply than anticipated in their bear case. Cathie Wood's $30,000 per vehicle estimate for 2026 suggests that Tesla could continue expanding, but whether this will happen is still up for debate. The GM profit margins, revenue growth, and projections for earnings per share all factor into this equation, but by 2025, Tesla could hit a market value of $3.3 trillion. What is even more surprising is how ARK's projections dramatically increase from 2025 to 2026, as their valuation model suggests Tesla's value will double. I don't see how a stock price of $967 could be justified under this scenario, which assumes a 22.5 P/E multiple. While I'm predicting a stock price of $1,000 to $1,100 at a 40 P/E, Cathie Wood's estimate of $967 with a 22.5 P/E seems too low. If Tesla does manage to deliver 10 million vehicles, I still think 7 million is more realistic, but we'll see how things evolve. ARK's prediction of $4,600 per share or $1,500 per share post-split is optimistic, and I'm not convinced that it will come true. While the bull case is bold, I find the bear case more plausible in terms of revenue and profit projections. Adding in Tesla's energy and insurance businesses, as well as other factors, could contribute to the company's power and growth. But overall, the bear case stock price is more realistic for now. Let's wait and see which scenario proves to be closer to the truth. This video gives an overview of Cathie Wood's 2030 stock price estimate for Tesla. Do you agree with her predictions? Leave a comment below to let us know your thoughts. Don't forget to like and subscribe to our channel for more updates. Thank you for watching, and we'll see you in the next video.